This is Davis Gill, Certified Financial Planner at the Jenkins Group. I'm going to talk to you about being a long-term investor in the stock market. This year has been one of the most historically volatile years in the stock market. Volatile years in the market usually coincide with uncertainty around the economic and geopolitical environments. We're currently in a very uncertain time when you consider the Russia-Ukraine war, the Federal Reserve's fight against inflation, and the Europe energy crisis. You're probably wondering, how does this pertain to being a long-term investor? I have a couple charts to show you. This first chart shows $1 invested from 1926 through 2021. A timeline of wars and major economic events are listed at the bottom. Notice the gray shaded area at the bottom is inflation. The green line is 30-day treasury bills. Orange line is long-dated treasury bonds. The gray line is large stocks, and the blue line is small stocks. You can see investing in the stock market is more volatile than owning bonds, but stock returns are tremendously higher than bond returns. Notice how stocks do a much better job of protecting against inflation. Stocks are claims on the past and future earnings of real assets, physical capital, land, and intellectual property. Their value is based on a multiple of past and future earnings. When interest rates rise quickly, like they have this year, future earnings aren't worth as much in the short term because of the higher risk-free rate paid by government securities. In the long term, corporations have the ability to raise prices on goods and services, which should increase their earnings and stock dividend. This is called corporate pricing power, and it serves as an excellent long-term inflation hedge. This year's rate hikes have made it very difficult for investors to price stocks in the short term, hence the volatile year. This next chart shows every bear and bull market from 1926 through 2021. A bear market is defined as a negative 20% market decline, and a bull market is when the market appreciates 20%. The box in the top right shows the average length and return of each bear and bull market since 1926. You can see that bull markets last much longer and their returns are tremendous. These charts put the current bear market we're experiencing into perspective. Yes, this year has been uncomfortable for stock investors, but there is always opportunity in every situation you face. The uncertainty we're facing should clear in time, and strong companies should prevail. Investors who own a diversified stock portfolio of profitable companies should benefit from the next bull market. A famous quote from Warren Buffett: "Be greedy when others are fearful, and fearful when others are greedy." When is the last time you reviewed your stock portfolio?